Bitcoin is going to hit a wall. It's actually going to hit two walls. And most people are not aware of this. Most people simply are blissfully buying into Bitcoin, seeing it as the digital gold that will not change in the next 50 years, in the next 100 years. You can simply just allocate and forget. And as the supply tapers off, as there's less and less supply of Bitcoin, there can never be more than 21 million, the fiat valuation of Bitcoin is likely going to go up. That's what most people think. But there are two major walls here. The first issue has something to do with what most people think is actually positive, and that's the halving. In April of next year, there will be the halving. So only half of the Bitcoin that's currently being issued every day, which is roughly 900, it will be cut in half in April of next year to 450. 450 Bitcoin being issued every single day. So that halving theoretically is positive for the price impact because there is less supply. Less supply with steady demand means a rising price. Most people see this as a very positive thing, and historically it had been a very positive thing. Right? Whenever we had the halving, 1 year after that, we tended to have a supply shock. We tended to have very, very high price appreciations. Now, I'm not saying this will be different this time around, but the wall that Bitcoin is going to hit, the first wall, is that this will also reduce the revenue of the miners. Now, why is that an issue? The miners secure the network. So when every 4 years you pay less and less Bitcoin to the miners, it's at least relatively speaking, less and less capital that secures it all. When it used to be 3% inflation, then it goes down to 1.5, then it goes down to 0.75, etc. This is bad because at some point the mining revenue will be so small relative to the secured value of Bitcoin that an attack is very, very likely. Actually, we had seen this in the very early days. We had seen those 51% attacks where then the person that owns most of the hashing power can reorganize the blockchain. So then you've got the double spend issue. Then the main unique selling point, the main thing that there can never be more than 21 Bitcoin goes out of the way. And suddenly the ledger can be tampered with and the whole thing isn't secure anymore. Now this is not theoretical, right? Some people think this might already happen in, say, 3, 4, maybe 5 halvings. So it could be 20 years from now. So in that way, Bitcoin is really not like a gold. In that way, it's still a technology that has to evolve to a degree. And the question is, can it evolve in time? Can it adapt quickly enough? Because in general, the community around Bitcoin, the developer community, is very much leaning towards not doing any change. So it might be that nothing happens whatsoever until we actually see that attack. And at that point in time, Bitcoin might be crashing massively until an actual fix has been implemented, if it will ever be implemented. So that's issue number one. I'm not saying this issue can't get overcome, but it is definitely a wall that Bitcoin will hit, and it's definitely something that has to be dealt with at one point. It's probably going to be less than 30 years. It might not be in the next 5 years, but it is something super important that's going to come. That's problem number one. Problem number two is scalability, unfortunately. We do have the Lightning Network and we do have increased adoption of the Lightning Network, but on the base layer, we can only transact 7 times per second on average. And that's an issue because to onboard and offboard of Lightning, we still have to make those base layer transactions. The question is also, how quickly can Lightning get adopted relative to people that want to invest into Bitcoin? That's probably one of the main reasons why centralized exchanges got so popular in the first place. They were cheaper, it's easier to scale, it's easier to simply just make a record in a centralized database of a centralized exchange. And so centralized exchanges can be competitive to just doing things directly on-chain, But then of course you expose yourself to the centralized risk, as we have seen with the FTX collapse, with all of that fraud that happened. So at some point, Bitcoin might have to find a solution on the core level to also scale beyond those 7 transactions per second. It might have to, in the end, maybe increase the block size. I have to do something else. But that's a fundamental issue that has to get solved, because even if Lightning gets adoption relatively quickly, you have to settle at some point on the base layer, and 7 times settling per second might really not be enough. And we can get a proxy of how urgent this is always based on what the current transaction fees are. And the transaction fees obviously also go up, at least in dollar terms, as the price of Bitcoin rises. So when we get more and more adoption, Bitcoin prices rise, but the Satoshi, the price per Satoshi also rises, and every transaction costs more US dollars as well. And that's a problem. When on top of that, you've got the bottlenecking because of that limited transaction throughput, you're increasing the price per transaction even further. On top of that, we now have another use case for Bitcoin. We've got ordinals, we've got inscriptions. That creates more demand just for pure transactions, independent of how much value is actually being moved. And that further can bring us into a tough spot. I will put the current transaction cost chart, the long-term transaction cost chart here on this video as well. So don't be fooled that Bitcoin doesn't need any development anymore, that it's just this gold-like thing where you park your money and everything will be fine. That's not the case. The scalability issue will catch up at some point. The security issue with the ever-increasing miner revenue will also catch up at some point. There will be the 51% attack, and there will be enough demand for blockchain space that prices per transaction will be so sky high that it doesn't matter how divisible Bitcoin is, because you can't transfer these small amounts because settling is so expensive, even when considering Lightning. So yes, returns for Bitcoin tend to be higher than for any other asset class, but that doesn't mean it doesn't come without risk. There is real risk, and the risk is that we are hoping that the central core developer team is going to solve those 2 issues before it is too late. We have to solve the security issue before we have this 51% attack. We have to solve it in a way that we also don't increase the supply limit, that we don't have suddenly tail emissions more than 21 million Bitcoin and people feel betrayed that there's actually change in monetary policy. Right? People buy Bitcoin because it's a safe, non-changing thing. So you have to change it in a way that there's still security for mining, but at the same time, there is no additional Bitcoin hitting the market. It's not an easy thing to solve. I regularly buy into Bitcoin. I dollar cost average into Bitcoin. I hold it for many, many years, but I'm also aware that there is risk. It's not just digital gold. It's still, to a degree, a technology play, and we have to solve the upcoming challenges, even though they're not super urgent. They have to be solved. Otherwise, Bitcoin will go down, as a lot of other cryptocurrencies already have. Feel free to give this a like and spread the word. Looking forward to the next video. There's also Telegram that you can join. Link is down below. Bye-bye.